What is up, everyone, and welcome back to the channel. Today, we're diving deep into the Bitcoin chart, breaking down what's happening right now and what we can expect for tomorrow. The market has been a roller coaster, as usual, but by looking at the key levels and potential scenarios, we can navigate this with a bit more clarity. So, grab your coffee, get comfortable, and let's get straight into the analysis. First things first, let's talk about the overall picture. We've seen some interesting price action recently, with Bitcoin testing some critical support and resistance zones. The big question on everyone's mind is, where do we go from here? Is this a momentary pause before the next big leg up, or are we staring down the barrel of a deeper correction? To answer that, we need to look at the probabilities and the price levels that will define the next 24 hours. Let's break down the most likely scenario, which I'm giving a roughly 60% probability. This is the stabilization and slight bounce scenario. What does this look like? In this case, we would see Bitcoin successfully hold its ground above the crucial $105,000 level. This price point has been a key battleground, and holding it is a strong bullish signal in the short term. If buyers can maintain control here and prevent any significant dips below it, we could expect a modest, but positive, move. We're talking about a potential rise of about 1 to 2%. It's not a massive moonshot, but it's a sign of strength and stability. It would suggest that the market is absorbing the recent selling pressure and is building a base for a potential continuation of the uptrend. This would be the calm, steady outcome that many long-term holders are hoping for. Now, let's consider the second possibility, which I'm assigning about a 30% chance. This is the minor correction scenario. In this case, the support we just talked about, around that $105,000 mark, starts to show some cracks. If we see the price slip below this level and fail to reclaim it quickly, it could trigger a bit of a downward slide. We're not talking about a full-on market crash here, but a noticeable dip of around to 5%. This would be a signal that sellers are gaining a bit more control and that the market needs to find a lower support level to regroup. This kind of correction is perfectly healthy and normal in any bull market. It helps shake out weak hands, reset indicators, and provides opportunities for those who are waiting on the sidelines to get in at a better price. The key here would be to watch how the price reacts as it approaches the next major support zone, and that brings us to our third and least likely scenario, the sharp sell-off, which I'd place at around a 10% probability. This is the scenario where things get a bit more dramatic. It would involve a decisive break below the major psychological and technical support level of $100,000. A break below this round number could trigger a cascade of stop-loss orders and panic selling, leading to a much faster and deeper decline. In this situation, we could see the price head down towards the $95,000 area, or potentially even lower, as the market searches for a new bottom. While this has the lowest probability, it's crucial to be aware of it. In volatile markets like crypto, anything can happen, and being prepared for the worst-case scenario are a hallmark of a smart trader. This would definitely be a test of conviction for many investors. So, let's summarize those key levels you absolutely need to have on your chart for the immediate future. Our primary short-term support zone is a range between $100,000 and $107,000. This is the critical area that needs to hold to prevent a larger downturn. The $107,000 level is our first line of defense, followed by the $105,000 pivot we discussed, and finally, the big one at $100,000. As long as we are trading above this broad zone, the short-term outlook remains constructive. On the flip side, we have our resistance levels, the ceilings, that the price needs to break through to continue its upward momentum. So, how should you be thinking about this? It all comes down to your own strategy and risk tolerance. If you're a long-term holder, these short-term fluctuations are mostly noise. The fundamental bull case for Bitcoin hasn't changed. But if you're a more active trader, These levels are your roadmap for the next few days. Watching how the price interacts with the $105,000 pivot will be your first clue. A strong bounce from there supports the 60% probability scenario. Weakness and a dip below it bring the 30% correction scenario into play. And a catastrophic failure at $100,000 would signal the low probability, high-impact sell-off. Remember, nobody has a crystal ball. This is all about probabilities and risk management. The best thing you can do is have a plan for each of these scenarios. Know what you will do if the price goes up, down, or sideways. Don't let emotions drive your decisions. Stick to your strategy. Use stop losses to protect your capital, and don't invest more than you are willing to lose. The crypto market is a marathon, not a sprint, and staying in the game is the most important thing. That's the breakdown for today, everyone. Keep a close eye on those key levels we discussed. The support range from $100,000 to $107,000. Thank you so much for tuning in. If you got any value from this video, please do me a huge favor and hit that like button. It really helps the channel grow. And if you haven't already, make sure you subscribe and turn on notifications so you don't miss any of our future market updates. I'd love to hear your thoughts in the comments below. Do you think we'll see a bounce, a correction, or something else entirely? Let's discuss it. Until next time, trade safe, and I'll see you in the next video.